Bob, crowdfunding. We were actually just talking about crowdfunding on Kickstarter. Tons of businesses that are really now formed around this idea.
Yeah.
Hugely important for the Jobs Act. What do we need to know?
Well, it's going to get a lot bigger over the next several months as all the rules get finalized for doing this thing. But the big idea from the Jobs Act is they're going to exempt startups from the normal rules, which normally would have prevented startups from selling their securities to unaccredited investors and would have prevented them from advertising their securities. Now, there is a big limitation, however. They can't just, it's not just ollie oxen free. They still have to do one of two things. They either have to go through a broker-dealer, a typical old-fashioned broker-dealer, or they have to go through a new thing, which is called a funding portal, which is a website that's got to be registered with the SEC and also with FINRA to offer these securities to people.
So essentially there is an official footprint, but as I just want to clear up, I'm sure everyone does know accredited investor, but this is basically you're saying you can now advertise to, market to, and take money from people who have less than $1 million in cash, and
Right.
then the value of their home not put into that equation.
Very good.
Okay.
That's
Well,
exactly right. That's the rule. But you do have to either offer your securities through a broker-dealer or through one of these funding portals that's registered with the SEC and FINRA. And that's really important because the SEC and FINRA are putting a bunch of rules around those funding portals to make sure that they're essentially acting as honest brokers. So, for example, they won't be able to compensate their own employees based on the amount of money that any particular company raises, for example. They can't pay outside third parties to find companies to bring onto the platform. But people should remember, investors should remember something very important. The portals are not charged with doing the same job as a broker-dealer is. Broker-dealers have to make sure that the papers that they present you with respect to a particular deal
are true, that there's no lies.
Exactly, are fair and accurate. The funding portals are not undertaking that responsibility, and they're not supposed to. So, you know, it's just a...
The funding portal seems like it's just there for the SEC to have a paper trail. Should something go wrong, they can look back later.
Well, and it does give them a point of policing. I mean, they can write more rules, and I think the idea here is they want to open the gates and see how this works, and then you can be pretty sure the SEC and FINRA will write more and more rules over time to regulate how these funding portals are actually operating.
Now, what about this idea of the wisdom of crowds? We were just talking about crowdfunding and how it functions on one company in particular, Kickstarter. So, I mean, they've raised a lot of money for a lot of products that don't end up working. So, I mean, as always, it's let the buyer beware.
Oh, well, of course, it definitely is. I mean, one of the nice things about the way the web has evolved is that reputation scoring systems have worked out, so you kind of know who you can trust to buy from on eBay. So the trust issue, the fraud issue is probably taken care of by those kinds of mechanisms, more or less, sort of, kind of. But the real issue is the one you're pointing out now, and this is really, really critical. The number one risk facing any startup, and as an investor in any startup, is future funding risk. What if the company runs out of money before they really perfect their product or service or find a market for it? That's the really, really big issue. And here, you're introducing a really bizarre dynamic with crowdfunding, because if you have a lot of little tiny investors, you know, everybody put in $250, $1,000 or something to get enough money to go, and now you need more money, you've raised your million maybe, you've blown through that, now it's time to go get professional money. The professionals are going to be very wary about coming into a company with lots and lots and lots of little tiny non-professional investors in ahead of them.
Because then that dilutes potentially their future investment.
Well, because it's not so much that, it's that if they come in and say, okay, you know what, you guys are kind of crazy about the valuation here, we're going to knock it down in order to invest. Now you're cramming down all these moms and pops. Or what happens when you have to do the things that you typically have to do in startup land? You have to switch out the governance. You have to get rid of the CEO and bring in another guy. Then does it become a big political battle because there are 500 people who invested because of the CEO originally? And so there are all sorts of crazy business dynamics that this is going to introduce that people haven't really thought about. What happens next? What happens after the crowdfunding round?
And we know the date, the official date, not launched quite yet, right? We know that the final form is coming soon.
Coming soon to like, a startup near you.
That's right. It's just like the Hollywood trailers.
We're waiting for the rules from FINRA and the SEC.